Good evening, ladies and gentlemen. I'd like to welcome you to yet another investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Sharing a panel with me today is Shenice Williams, our investment advisor, and it's her first time, so welcome, Shenice.
Thanks, Dan.
Oh, first time to this program, at least. Good deal. Today we'll be discussing Grace Kennedy Group and Jamaica Broilers Group Limited, and we're excited to share this insights with you. If you like the content, don't forget to hit the like and share this video. If you like the content and this isn't your first time, be sure to subscribe and hit the bell to receive all notifications. We upload content like this just about every week. If you're looking to embark on your very first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media today and get started. Okay, up first, I'm going to do a review of Grace Kennedy Limited, and then that'll be followed by Shenice doing a review of JBG. Now let's get right into it. Okay, today we'll be looking at the results for the 6 months ended June 2023 for GK. As you guys know, it's one of the largest conglomerates in the Caribbean. They celebrated their centennial last year, so they've definitely been around for a while. It's a strong company, blue chip, that any pension fund would be jealous to have in their portfolio. And it's a well-diversified group doing food trading, banking and insurance, remittances, among other things. More than 60 companies in the group. Very well diversified with operations all throughout the Caribbean, Central America, US, UK, and with approximately 50% of their revenues now coming from exports. So it's really a good entity to have in your portfolio, and I'll explain why. Looking at the results, we'll see for the half year, revenues were up 8% to $78 billion, with the profit before other income also growing up by 11% to $4.2 billion. And profit from operations therefore increasing by 13% to $6.1 billion for the half year. Net finance cost up a bit to $485 million. Their share of results in associates and joint ventures up 23% to $524 million. And net, this results in net profit attributable to shareholders of $4.2 billion for the half year, folks, which is up 14% over the same period last year. That's an EPS of 4.21 cents for the half year and trailing earnings of $7.55 billion. So massive results there. Stocks trading at $70, which is only a PE of 9 times. In the main market, where I like to think of the average PE as being 10 times, so it's undervalued by about 12% by that from that perspective. But when you consider the growth, this is a business that's growing year on year and constantly executing new acquisitions. I really do think this stock should be trading at a minimum PE multiple of 12 times, which places this at a minimum value for me of $90. So I'm definitely expecting to see this stock getting back to $90 within the next 3 to 6 months. We've seen the stock at much higher prices in the past, and we'll talk a little bit about that. I personally bought it 5 years ago at $52, and I'm really happy with it. Certainly a top 10 investment for me and for many pension funds, I have no doubt. Total assets up to $207.8 billion. That's a 6% increase. Shareholders' equity up to a whopping $76.4 billion. So that's 9% growth year over year. So really impressive. I mean, it's definitely, a great company performing really well, continuing to grow. And we see them, focused on doing lots of acquisitions. And that's what I like about GK. Despite its size, they're big, over 60 companies in the group, you still see them executing a strategy of growth. So for instance, this year alone, we heard them announcing a further 35% acquisition in Catherine Peak, which takes them up to 70%. They did that for $612 million. And we've seen them expanding in that water business quite a bit, right? They acquired the distribution rights for 876 Water brand a few years ago. And I'm told very recently that they've just acquired the entire business, Unibev, which owns the 876 Water, and that did the bottling for them. So we see them going really hard and strong in the water space. Similarly, in insurance, they just announced the finalized acquisition of Scotia Insurance Caribbean Limited for $3 billion cash with a $5 billion contingency payout, depending on the performance over the next 2 years. And they acquired that business with $1.2 billion cash. So paid $3 billion, but got $1.2 billion cash with it. And so we see them going strong in the insurance space. And we call their acquisition of Key Insurance a few years ago. And again, they took themselves up to 73% last year. So going strong in insurance, going strong in the water distribution business, and just doing, great things all over. Next slide shows sort of a feel for where the revenues are coming from by segment. And we can see that the lion's share of the revenues, 79% of it is coming from the food trading business, followed by the money services business. And then from a profitability point, which you don't quite see here in the pie chart, but you certainly see it there, we can see that food trading is making up about 50% of the profit, from 59% last year, whilst the money services is up to 27% of their profit from 24% last year. And we see the food distribution business, in particular in terms of revenues, growing by 6% to $61 billion, while the profitability grows by 30% from $3 billion to $3.9 billion there. So again, they're doing really well in the food distribution business with net profit margin, certainly at this level, segment level of 6.4%. So that's impressive. Similarly, we see the insurance business, I suppose, guided by the acquisition, growing by 24% in terms of revenues, up to $8 billion, and growing by 30% in terms of profitability, up to $725 million. So insurance, not so big from the profitability point of view, which is good because we see the adoption of IFRS 17 and, not having much impact on the business at all, because again, the insurance segment's on a hugely profitable segment for the business, but it's still something that they do pretty well. And followed by money services, where you see the profit flat at roughly $1.65 billion. Similarly, revenues flat, but money services is one of the most profitable segments with a 38% gross profit, net profit margin. So very profitable segment for them. Remittances, and again, with the acquisition of Scotia Caribbean Insurance, which they rebranded to GK Life, we can see them expanding across the region. So again, that will complement the remittance business, which they're doing all throughout the region as well too. And we know how powerful the Caribbean diaspora is in North America and UK, which are places where they also do their food trading businesses. So it makes good sense to me to see how they bring everything together. So it's a big conglomerate, but we can still see how everything's tying in. Next slide shows the profitability by quarter. And again, you can see in this last quarter of the 6 months we did, but both quarters actually in the 6-month period, topping $2 billion per quarter. That looks like the new standard to me, with them doing at least $2 billion per quarter. So they're clearly on, to an $8 billion profitability for the full year, December 2023, which we look forward to. It's a business that's done, as high as $2.5 billion of profit we saw in fourth quarter 2021. So we really like Grace Kennedy. I'm bullish on it because it's a business that shows how strong and resilient they are to recessions and things like COVID. There was a small downturn in the business, but always remained profitable. And food trading, food in general is a commodity folks are always going to be consuming. And Grace, being around for 101 years, really strong brand, not going anywhere, and they're increasing their revenues from exports. So it's a good thing to have in your portfolio because they're now earning foreign currency from their operations overseas, strong foothold in Jamaica and strong brand with the diaspora. Last slide shows the what's happened with the share price. And so this is why I believe there's a great opportunity to get in on this stock now if you can. This stock's traded up to as high as $110 in the not so distant future. It's coming from $50, like I said, 5 years ago. Now it's down at $70. It's a great buy at $70 as interest rates, as I keep saying, start to trend down Q1 of next year. And as liquidity increases in the market and folks start turning back to equities, Grace Kennedy is definitely a stock that you want to add in your portfolio. So if you can get it at $70 today, I'm guessing in 6 months' time, this will be at least $90. And as they continue to grow and expand and increase the profitability, it will certainly get back to $100 in my view. So that's my quick review of GK. Shenice, what are your thoughts?
Well, I definitely like GK as well. It was one of the first companies I think that I bought when I was just investing because it's so widely known. It's a company that everybody in Jamaica should be able to relate to because we all consume the products. We all use their services. They're big on expansion right now, especially internationally. And that's something that we can all appreciate. Their manufacturing line is growing. They're doing a lot of acquisitions. I know they're looking to list the manufacturing arm on the international markets. So that's something that's a quest that they're currently on. And these acquisitions definitely prove that they're well on their way to that. There's supposed to be a share buyback for them as well, pending some approvals. So that should definitely help the stock price in the near future. So GK, definitely time to take advantage of the prices that you're seeing it at right now. You may not be able to get anywhere $70, even maybe $80 in the next 6 to 12 months. So I agree. Jump on board with GK.
Good deal. Thanks for that. And, how could I not forget to mention, the management team. When we look at businesses, you look at the products, you look at the services, you look at the strength of the balance sheet, but you also have to look at the management team. And the lineup is just phenomenal with the likes of Don Webby, at the helm as Group CEO, Chairman, Professor Gordon Shirley, and then just a great finance team with people like Frank James. It's a great team. We see them really strong in the succession planning, strong in the acquisition mode, as you said, Shenice. And so it's a stock we really like, a company we really like. They've been around for 101 years. They'll be around for another 100 years. But more importantly, in the next 6 to 12 months, this stock will be north of $100. So it's a great time to get out and buy some. Okay, well, thanks for that. Up next, we're going to look at Jamaica Broilers Group, another one of my favorites. And Shenice will give us the deep dive on that one. Over to you, Shenice.
All right, thanks again, Dan. Good evening again, everybody. So Jamaica Broilers, I don't really think we need an introduction to it, but in the event that you're not really familiar with the name Jamaica Broilers, it's a group of companies, really. It's incorporated in Jamaica, and it has some of the most recognizable brands for Jamaicans. So the brands include the International Poultry Breeders, High Pro, Reggae Jammin', and most popular one, Best Dressed Chicken. So looking at their first quarter numbers, this is their quarter that ended in July. Their revenue grew 2% over the same period for last year, up to 23.39 billion. And this was mainly due to the Jamaican operations saw a 5% increase in revenue. And that's because poultry sales increased, whereas the U.S. side of things saw a slight 3% decline in the prices due to falling prices on the product line. Now, the Jamaican operations make up about a little over 60% of the total revenue of the company, with the rest going to USA and the rest of the Caribbean. Now, looking at the gross profit, it went up 8% this quarter at 5.7 billion. Their distribution cost increased by just 4%, 720 million. And their admin and other expenses actually decreased by 2% compared to last quarter. And this brought their operating profit to 2.2 billion, which is a 30% increase over the last period. Now, for that operating profit, the profit slightly fell off with the Jamaican operations at about 7%. And this was attributed to increased pressure from the high levels of imports, which affected the baby chick sales to the JBG small farmers. However, with the U.S. operations, the segment operating revenue actually went up 44%. And this was mainly due to the expansion of the South Carolina farm and how well the Best Dressed Chicken is actually being accepted over there. They're seeing a sharp increase in sales. The market is loving the chicken over there. So that product line is really growing fast for them. Looking at the balance sheet, their assets grew by 26%. Liabilities went up 28%. And that brought the shareholders' equity up 21% this quarter. Now, for the statistics of JBG, current share price is about $33.50 15. That's where it closed yesterday, which was the 7th of November. And we're looking at a PE of 8.62 times. Now, the PE on the main market is around 10 times. And then the PE in the manufacturing sector is around 12 times. So this 8.6 times PE that we're seeing for Jamaica Broilers, it's well below not only its sector average, but its main market average. So this is one of the most discounted companies that you can get on the main market right now. It has a book value per share of 22.35. The trailing EPS we're looking at is 3.85, and the trailing earnings is at 4.6 billion. Now, looking at the quarterly profit movements for Jamaica Broilers, you can see that they have been steadily increasing over time, averaging roughly about 1 billion per quarter since they've gotten rid of the Haiti operations, which were holding them back. So they saw their record quarter in Q3 of last year, which was 1.4 billion. And for this quarter, their first quarter completely without the discontinued operations, we're seeing their second best quarter ever, which is 1.2 billion. Now, even with them recording record numbers for the entire year last year, they still had a write-off of about 1.1 billion because of the Haiti operations. Going forward, that's gone. And we've seen the numbers for this first quarter. I think it's going to set the stage for what we're about to see with Jamaica Broilers, because we're now coming up to our Christmas period. That is the height of their performance. And tourism has increased. We saw record numbers of tourism this year. Christmas time is the highest season for tourism in Jamaica. So those numbers, coupled with everything, all the expansion that Jamaica Broilers has going on. They expanded the U.S. operations. They're expanding the warehouses down here. The Cumberland warehouse was just expanded by them this year. So they're in the prime position to really take advantage of the growth that we're about to be seeing in the island, in tourism and in food production going forward for the rest of the year. So I'm very excited to see what numbers we're going to be seeing from Jamaica Broilers coming up, especially with the Christmas numbers and the heights of tourism coming in. Looking at their price history, so you can see that the stock has been trading probably between the 30 to 34 band for the past couple months. We saw it at a high of $39.99 this year and a low trading price of about $26. Now, with a PE of 8.6 times, there is so much room for this stock to grow. All the plans that they have, all the expansion plans, they're expanding their product lines. The South Carolina plant is operating at about 90% right now, going into the Christmas period. Leveraging that, we should see production really ramp up, revenue on the bottom line really ramp up for Jamaica Broilers. And Jamaica Broilers, I think, is one of the most relatable companies to Jamaicans. I do think every Jamaican should be looking to get into some Jamaica Broilers shares, because their largest client is probably the biggest restaurant in Jamaica, which is KFC. So if you are a KFC customer, why are you not buying Jamaica Broilers? Why are you not paying yourself back for buying that chicken? Every time you go to KFC and you see the prices increase, you should think about Jamaica Broilers. Every time you drive past KFC and you see that long line and you're wondering why people are there, you should think about the money that Jamaica Broilers is getting from this as well. Even every time you go to KFC and they're like, we're out of wings, we don't have any zinger right now, you should think, okay, this was a great sales day for Jamaica Broilers, and they're going to be coming in with more orders for them. So you can always relate it back to your investments. And Jamaica Broilers is a company that steadily pays dividends. They pay it twice for the year. dividend is just over 2%. So you can be using your dividend payments to even fund your lifestyle. You can use it to buy back the KFC, reinvest your dividends that way. You can use it to buy some best dressed chicken, do your grocery shopping. I know for me, I'm a shareholder of Jamaica Broilers, and my last dividend check could buy me a bucket of chicken, and I was very appreciative of that because the money is going back into my pocket, really. So Jamaica Broilers, great company, giant, but has so much room to grow. Best time to buy. I'm buying. I have in my portfolio right now. I'm looking to get more. So company I'm very bullish on. Dan, how about you?
Yep, Shenice, I feel the same way. Definitely in my top 10 portfolio. I bought it 5 years ago at $22. Watched it go up to 50. It's come back down to 33, but I'm not worried. When you see it, first quarter profit of $1.2 billion, Shenice, and you think that Q1 is not traditionally a strong quarter for them, and they did $1 EPS in the quarter, so let's say $4 EPS for the full year, and I think this should be trading at 12 times. It'll certainly get to 12 times in the next 6 to 12 months. You can see a $48 stock price. So you can get it at $33 now, folks. I think it's going to be at $48, $50 in the next 6 to 12 months. You would have made yourself a nice gain, and you would have invested in a very strong company, strong brand, as Shenice said, that's really well positioned in the market. I mean, their closest competitor is perhaps CB, but these guys are much bigger, much stronger. With the growth in the tourism sector that's coming as well too, they tend to have most of that business. So there's great opportunity for further growth for broilers, not only in Jamaica, but as Shenice said, in the US, where that best dressed chicken brand is taking off like crazy. So it's great to see how well the company is doing. Once again, strong balance sheet, good name. And then we look at the management, you see second generation owner operator like Chris Levy, strong finance team led by Ian Prasad. It's hard not to bet on JBG. When you look at the top 10 shareholders, you can appreciate that, again, it's a blue chip company held by a lot of the big pension funds. So definitely get you guys some. I can't buy any more because I'm at my limit in terms of my portfolio, but I'm loving it. I'm looking forward to seeing it get up to $50. And on the dividend point, yeah, I get really huge dividend checks. I can't tell you guys what I buy with it, but it's huge. And I'm really enjoying it. It's one of those companies that I think has great potential for growth. GK, Grace Kennedy, NCB will always be in my top 10 because they're all strong in their positions, market leaders. They've been around for a long time and they're going places. So definitely you guys should be buying GK, NCB, despite the chop in the water, and JBG. You guys should definitely be buying these three. Well, thanks for that, Shenice. We really appreciate your insights. And with that, we are going to bring the show to a close. As usual, I'd like to thank our viewers again for being a part of today's Investors Update. And I'd also like to thank my fellow panelist, Shenice. Although on her first time, she's very experienced, as you guys can tell, for her invaluable contributions today. We encourage viewers to follow us on social media for all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you all for tuning in today. We really appreciate it. And remember, wise investors, slow and steady wins the race. Keep safe.